eating real quick. But hey, Mike, quick question. If you're
What's
here,
going on, brother?
what's up, Puka? Oh no, we got two mics in here. Other mic.
Um, okay.
All right, are you recording this? Cause KB ain't here. Okay, cool. Thank you so much for doing this. The reason for that is because he wanted me to talk about fair value gaps. So I literally just spent the last hour and a half doing this that I have right here. And he's not even here. Um, so I wanted to share with you guys. This is gonna confuse you, Puka, or Pook. Yeah,
Just
we'll
call
go
me
with
Coop.
that. Okay. This may confuse you a little bit just because you're brand new to this all. But we're gonna be talking about fair value gaps, which that's what I'm gonna start you off with. That's the first thing I really want you to learn, because
Okay.
that's gonna be your bread and butter for a lot of entrances and when you trade. Um,
Okay.
but what I want to talk about is why do we see retracements? Why do we not see retracements to certain fair value gaps? Um, it's very important that we know this and why, because it will allow you to see where the market should pull to. Because we see this 1 hour fair value gap right here. This is where we're going to start. And we're like, why didn't the market pull back to this? Why did it just keep rocketing up? And I mean, it may not look like a crazy amount, but from here to here, that's 400, $700 move. You're looking
Okay.
at $14,000 on one contract,
Oh
and
shoot.
that was within 3 hours if you held. So Friday the market dropped at open, dropped like $100. So one contract would have made you like 2 grand. Um, but if you caught the bottom and held to the top, you would have been able to make 14 grand off one contract,
Dang.
which
Okay.
is yeah, and then multiply it by multiple contracts as your account grows.
And I'm guessing like how y'all
Multi-contract.
know when it's gonna go back up, y'all kind of like, I guess y'all pay attention to the market a lot. And when you say
Well,
market, are you talking about like stocks and stuff, or?
no, we're trading futures. So um, it's stocks are more steady growth, not as volatile. The stock, let's say you have Tesla. Okay, well, share of Tesla represents Tesla. Well, this is the future, so we're trading in Q1. This is the Nasdaq. So we're trading an index. The Nasdaq represents the top 100 technological companies on the market. So this moves based off 100 companies.
Okay.
Where you have the S&P 500, which S&P 500 moves off the top 500 companies, which is like the top 500 stock companies. And then you have the Dow Jones, which the Dow Jones represents industrial companies. Um,
Oh.
so like what you'll see here though, let's just go ahead and I'm just going to give you a quick taste. So you see this little gap that's right here on this candle,
Yes. Yes, I
from
do.
this candle to this candle.
Yep.
So we can draw that out right here. Now let's look at it to the right. Look how the market tapped into that. It went into
Oh,
it
yeah.
and then used it to push higher.
Gotcha. And so that's pretty
That's
much the
the
lowest point.
well, so we're using, and we'll get into it all, but we're using, this is what's called a fair value gap. We're using fair value gaps, order blocks, different things in the market to be able to make good, high probability analysis on where we think the market should go. We're trading off liquidity, and liquidity are highs and lows in the market. Liquidity sits below here and above here. And what's that? That's people's stop losses usually. And so the market will target highs and lows to take liquidity out of the market, open up orders for other people to buy. But we'll get into all that later on. But I want to talk about this 1 hour fair value gap that we see here, you guys, because we're sitting here and some people are like, well, why didn't we retrace back to it during this push to the upside? Well, we can drop down to the 1 minute. And you're gonna see a few things here. Not too pretty, not too clear. What's up, Riz? Um, but the reason the market did not need to retrace back into it, I know it looks like a retracement right here, but this is where this completes the 1 hour fair value gap. So from right here to right here is what completes that 1 hour. So it looks like a retracement, but if we look at this low that's right here on the 1 hour, if we look at it, it's this part right. It's that right there, which is what completes the 1 hour, which is what creates the fair value gap, as you guys already know. But
Hmm.
what I want to do is I want to drop down to the 5 second because the market had no reason to retrace back to it because of this. And I know now you see two taps here, but that's once again, this is what creates the fair value gap is from here to down here on 1 hour. Now let's look at this. The market had no reason to retrace back into this. Why? We have a fair value gap here that was tapped into. Well, the next one up is this one right here, which was tapped into multiple times. We have this one right here now that was tapped into. We look higher up as well now. We have this one right here. It was tapped into. We have this one right here that was tapped into. We have this one right here that was tapped into. This whole fair value gap is balanced. There's nothing in here that is an inefficiency that is causing the market to be unbalanced, that gives the market a reason to need to retrace back into this to balance out price to then push higher. So that's why the market left this 1 hour fair value gap behind in the dust because it had no reason to have to go back to it. The market will go back into it. Um, what's up, Crimson? The market pulls back to fair value gaps when there's an inefficiency that's left behind. And this is a perfect example right here that I want y'all to see. We have this 1 minute fair value gap. And the only inefficiency, the only one that it left behind in this 1 minute fair value gap is this right here. This candle. And what did the market do? It pushed up, came back down into it to then be able to push higher. And so that's when you'll see a retracement back to inside a fair value gap. And some of y'all, it's going to be harder for you guys because y'all don't have a 5 second time frame. Y'all don't have a 1 second time frame like I do. It costs a lot extra, um, paying $70 a month for this. But when you get to a place where you're more and more a serious trader, and your income is very dependent upon your success in this, being able to have the 5 second, the 15 second stuff like that's going to be very beneficial for you to have. Because I'm able to drop, and that's why I love the 5 minute and the 1 minute, 5 minute, 5 second, the 15 second time frames, the 1 second time frames, because I can drop down and see the very tiny details that no one else can. I can see, okay, why the market retraced back into this? Okay, because it has a 5 second fair value gap that it needs to tap into, then push higher. This fair value gap was an inefficiency. It was not balanced. So the market had to pull back into it, use this one that hadn't been touched, be able to push higher because everything else from here up had been touched and tapped into. That was truthfully, that's the only fair value gap in here. Well, yeah, no, I'm just what I'm trying to get at with the guys here is because a few of them have been wondering and asking me questions on how do they know if the market's going to retrace back to a fair value gap or not. So I drew this up for last hour, finding these just so I could use an example to show you guys why the market didn't need to retrace back to this 1 hour, but it needed to retrace back to this 1 minute. And then I also have another one up here. So let's drop to the 5 minute time frame. Got to find it. So we have this 5 minute fair value gap right here. Market had no reason to, it didn't retrace back to it as we can see. And so what you're able to do in this situation is, well, let's drop down to a smaller time frame. I think it's the 1 second or it's the 5 second. It's one of them. I can't go back too far. I had to use examples that were nearby, because when you drop down to the 5 second or the 1 second, you cannot go back as far on your data. So let's look at this. So here's what completes that fair value gap. Start here to finish here. That's what completes the fair value gap. So that's why you have this tap that's right here.
Oh. Okay.
Who was that?
Oh, that was me. Pook.
So yeah, these are the 1 second. But as you can see, I mean, if we go through this right here, every fair value gap, this one's been tapped into. This one's been tapped into. Every fair value gap's been touched. That's why the market didn't have to retrace back to it. You drop down to the 1 second, since that's what I drew it on. Now I just gotta find it. Here we go. And now if we look at this, you're gonna see first fair value gap touched. Next fair value gap touched. This one was touched right here on this very next candle. This next fair value gap was touched right here. There's a volume imbalance right here, but it was touched right here. We come up higher, all these volume imbalance has been touched. The very next fair value gap right here has been touched. And if you continue up, there's nothing else. Nothing else at all. So why the market not have to retrace? Because everything is balanced with inside of this. So the market can continue pushing higher. Unlike this one where we see the market pulled back into it. We pushed higher, but then we had that pullback only for that 5 second fair value gap that's right here. And I mean, dude, they even have time frames that go down to nanoseconds. It's crazy. And now you can go to these. Okay. Now these two bullish fair value gaps are where the market reversed that morning. What I want to show you guys about them though is what's going on inside of them. Because here's another good example. Now, what do we see here? We see a whole bunch fair value gaps that haven't been touched yet. Now, you sit there and ask, well, why didn't we trace back to it? Let's look at the 1 hour. My throat's on fire. Now, the reason we didn't retrace back to it is because they are inside of a larger time frame candle. And on the larger time frame candle, the only fair value gap there was this one right here. So this is more significant than this. And it considered the reason we didn't retrace back to it is because everything below here was considered balanced at the current moment. Doesn't mean these are balanced. At that time during the market session, price was considered balanced below. It did not have to retrace back to those because of that. Instead, it was hunting for inefficiencies to the upside, just chasing after these. Now, will price go back for these? Yes. There's liquidity here that the market's going to want. Now, do I believe the market's going to continue further down? Yes. So the market will come back through and retrace back into these. But the reason it didn't have to do that here was because it considered price balance from everything from here to the upside. Yes, higher time frame is very, very important. You got to pay attention to the higher time frame. But the lower time frame is just as important. But higher time frame situations are going to be your best friend because you see this you see this right here, and if you caught that, you're Richie Rich over here. Every prop firm's going to want to send you to a live account because they're not going to want you to steal any more money from them. Even though we're not stealing, we're working for it. They're really the ones stealing from us. I don't know if you guys, if anyone in here remembers me talking about these lows right here. I think I may have talked about it with Mike, but I'm not sure if I'm pretty sure I shared it in the channel too. But I've been waiting weeks for it to come back for these and tap into this, yes. Riz, yes, sir. Always check left. Always look left. But I've been waiting weeks for the market to come back for these. These are 15-minute candles. So you got 1, 2, 3, 4, 5, 6. You got 6 candles where their lows are all the same. They're not all the same, but the thing is you look at this, and I know you see it as this candle's lower than this one, so this one got swept. That's not a sweep. That's 669 and that's 673. That's a $4 difference. These are still in the eyes of the market. These are all 3 equal lows because they're so close together. You look right here. This low did not take any of these. This low did get taken by this one, but I mean, once again, 678, 675. It's a $3 difference. The market still sees these as equal lows. So you have all of this right here, and this was a news candle from a Friday. I forget exactly what it was. I just remember exploding that day. But I've been waiting for it. And I mean, if you sit here and look, that is the that's the low we really had before we had, because we came and we kind of took this one, but not fully. So these are still kind of considered equal lows too. I want to see the market go for these. These are still on my target. I still want to see all this happen. I've shared it with a whole bunch of y'all in here. That's like my final destination. But what I was wanting to see was these get taken, and of course, this get tapped into, and us have a pushback. I wasn't looking left, as Riz said. So after I took that short, I went to bed, and then woke up and saw the market had pushed $700 back to the upside, and I was like, son of a gun. Now, if we look to the left, we're going to see this gap. Where did it open? 320. The market pulled back up into this opening week gap. Um, I mean, if we look at it like this, oh, you can't look at it like that. It won't let me pull my screen far enough. But the market went back down, came up, pulled into this new week opening gap. Now it did. Oh dang, Brendan's not here. This is a good example. Now, not only that though, if I clear this, we're gonna see that you have this low right here. The market came down, pushed back up, and came further down. If we draw this out, the market was considered balanced at this point, and it didn't need to go any higher. And I know it looks like it, but this fair value gap that's right here did not get touched. And if we drop to a smaller time frame, I could show you that everything was touched through here on this candle. Market didn't have to go higher. It didn't have to go for this. It went for this inefficiency right here to balance out price right here to then come back down. And right now we have equal lows here and here, which I could see the market opening and wanting to go for on Sunday. Any questions?
Would you be able to remind us quickly how you would say this is balanced or this is not? I mean, like it's always necessary to go over it because even though I'm quite familiar with this, I'm still quite confused at times. You know, it's just yeah.
Like, are you asking me to go over like a balanced fair value gap?
No, well, I guess yeah. Like which one you
Uh,
would consider balanced? Yeah, which one is not?
okay, yeah. I'm guessing you got in late. Did you miss the beginning? I think you did miss the beginning. So yeah, I went over all these fair value gaps that are through here, showing them why the market retraced and why the market didn't have to retrace. But I'll run through it with you real quick. There's nothing wrong with getting a little bit extra.
Actually, I was
So we have,
here, just to be honest, yeah, it's just, you know, like sometimes I'm looking at fair value gap, for example, slightly below what you're showing, and I'm still thinking in the back of my head, you know, like because I remember this day, I was also looking at this stuff, and I was thinking, you know, why wouldn't we still tap this one? You know, even though you kind of know, but still you're not, you know, not certain for 100%, you know what I mean?
yeah, no, yeah, you're good. So when we take sufficient sell side and the market reverses, once we take the sell side that the market's required to is wanting to take, well, we have to then go up to buy side and tap into an inefficiency on buy side. And then we can come back down to sell side because then we're going to go to an inefficiency on sell side. And we're gonna continue pushing until market considers it balanced. Um, so like, were you here when I explained this 1 hour fair value gap?
Yes.
Okay, cool. So because that's like what I started with, so I don't have to run back through that. Um, what I'm getting at in this situation though is, and if we go to the 15-minute, I think I could show you better. So we have this fair value gap. That's an inefficiency. It got tapped into right here. We have this fair value gap. That's an inefficiency. It got tapped into right here. We have this fair value gap. But like what I was saying to you guys, and I can't go back this far on the small time frame, otherwise I would show y'all. But and it won't let me do 5-second or 1 second on replay mode, so I still can't even show you guys. It says the data's not available. But if I was able to drop to a smaller time frame, this is balanced out because the market tapped into it. This is balanced out because the market tapped into it. This was already balanced out because through here, every fair value gap on the 1 second or 5 second or nanosecond has been touched. So that's why when I say balance, there's no inefficiencies that the market currently has to reach for to the upside, which is why the market came down, or the market came up, use this previous low to balance, and it balanced, and that's what's considered an automatic rebalance. The market did an automatic rebalance in price, and when this low into this high, price was now considered balanced above, and therefore it didn't need to go any higher because there were no inefficiencies to the upside that were needing to be taken.
I
So
see. So
that's why,
basically, oh, sorry.
yes.
Keeping
No, no,
this
no,
in
you're good.
mind, it just simply means that now we are more prone to go downside, right? Like to continue downside since we already balanced. There is no reason. Since we basically tapped, right? We should expect like further downward move.
Yeah, I do expect further down for the market from here. 100% do. I'm still expecting the market to get to the low 24 and then even possibly below that. And do I think it's going to happen within the next week? No. I think it could happen with the next few weeks, by December, end of December. Yes, possibly. But I really want to see it get down, like, and I mean, I would hate, I mean, and I don't want to see the market just drop because, you know, that affects a lot of people's jobs. But just from my analysis, I want to see the market kind of come back down into this area through here. That's the kind of correction that I'm looking to see. And then hope the market would push back up from there. Because a lot of my inefficiencies I have kind of fade off from here. There's really not much left on my main chart that I use. But if we continue this bearish downtrend, the next draw on liquidity is going to be these two lows, along with this one down here. This is a new week opening gap that hasn't even been fully filled. We zoom in on it. It starts here and ends down here. Market never filled it. Wrong one. That's an inefficiency in the market. But I want to see, there's still some correction that needs to happen. And I mean, that's just my thoughts. But we don't have inefficiencies to the upside that give us a reason to continue up higher.
So would you change your outlook at the market, even like let's say we close above 25,300? So if we, if something happens and we go higher than let's say 25,300, right?
Mm-hmm.
Would you change the outlook for midterm or nothing will change?
Oh, so if we look at the 1 hour, my thoughts on the market really pushing back up. Let's see the 15. Still looks kind of the same. Let's check the 4. If we got up above here, and yes, my thoughts on the market are going to be considerably different. I'm definitely thinking at that point we're pushing to back up to all-time highs. And the reason I say that is because these are long-term highs. Paying attention to the 15-minute, 1-minute, stuff like that highs are not as a lot of them are going to be more medial term highs. So kind of like the what's happening in between the main highs, because you have more important ones, you have less important ones. So what I could do to kind of show you what I'm talking about is so like you got this one here, these down here. These are more like medial term highs. These are going to be your more long term, because you'll see here, this was all-time high. This stayed below here. This stayed below here. I mean, this one stayed below this one. This one stayed below this one. This one stayed just a little bit below this one. You come further down. This one stayed below here. 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 You come over. Well, this one got taken, but this one stayed below this one. So I'm not as attentive to these two as I am this one and like this one. Then you come here. This one stayed below here. This one stayed below here. This one stayed below all these. And you got these medial term highs. So the one I'm really paying attention to are the highs that are being respected by the market. If we get a high that's being disrespected by the market, that's one of the more important ones, well then my outlook will start to change. So like if I remove all this, probably gonna regret that, because watch me need it to show y'all something. So we got this order block here. Those touched into, so they didn't take that high. We got this order block here that this touched into. So we don't have to, I'm not worried about that. Now you sit here and ask, well, why didn't it tap into this fair value gap here? Let's look at it on the 1 hour. It didn't need to. It tapped into the fair value gap that's on the 1 hour. Back to the 15. We come back to here. I think I need to stay on the higher time frame. And this all roots back to like what Riz was just saying a second ago, paying attention to the higher time frame. So this one respected this one. We go down here. Market didn't need to, market tapped off the first fair value gap here. So my focus is going to be these. If we come up and we close through this fair value gap, and then we close through this bearish order block that's right here, I mean, that's going to give me thoughts on, yes, we're pushing back up to all-time highs at this point. Because this is liquidity here. But right now, the market is considered it balanced, and it's going down for everything below. Because like I said, like I showed you on the 15-minute, every fair value gap's been tapped into. That's above right now. So it's not having inefficiencies that it needs to really chase for.
I see. So the whole zone 25,300 to 25,900 that you have just shown us is basically an uncertainty zone, right? That we cannot say anything for sure.
Wait, what zone?
Oh,
Oh, right
25,300.
here?
Yeah, like
Oh, are you
everything.
talking about?
Because yeah, because you said everything is balanced here in this zone, and you would change your perspective only above 800, basically, right? So 300 to 800 is kind of like an uncertainty zone, right?
Well, so if you look at it, there's no fair value gaps there. So there's no inefficiencies that the market really needs to go for. And I could draw this one up here, but I can't freaking view it. I can't I can't view it on the 1 second or the 5 second. It won't let me push back that far. I'm sure I could find a way though to get down to it.
Well, there are multiple platforms. For example, I'm using ATES,
Yeah.
any other platform which basically allow you to, download like last latest half a year down to tick, and you can like replay any day. So there are
Oh,
definitely ways to have a look at it.
well that answers my question already. I don't need to. Look at it on the 15-minute. There's no fair value gap there, so it's been touched. Here's your answer. There's no fair value gap at all there. So everything in here in this 1 hour that I just drew has been tapped into. And that's just on the 15-minute. Yeah, and we still got those that we need to go down to. I just wonder when the market would go for those, because, like, that's crazy. I still have those drawn up too from when that happened. If the market went back down to that, the whole world would freaking crumble.
You know what I suspect in coming days? It might not happen because we still got uptrend going on, and we might go up because of Nvidia earning on Wednesday. I suspect around February, January, February. It's not now. So that might be a 30% drop, 35%. I'm suspecting we're gonna hit 27,000 on NQ future.
Man, once that 27, remember when you
Yeah,
told me about that.
I still stick to my prediction, what I said last time.
Yeah, but you're
Anyway, let's
permabull.
see. Yes, I am. Let's see what happens.
No, I'm with you, bro. I mean, shoot, whichever way the market goes, I'm all for it. I've been waiting to see this correction to the downside. So I wanna, that's where my mind still is until I see one of those long-term highs get taken. But Crimson, as you can see here, price balanced off of it perfectly. Push lower. That high tapped into that low. And you'll see that quite often. It's not something that doesn't happen on occasion. Cause like if I were, let me pop out this screen and then pull up my lessons. And then let me change stream. So you'll see here, um, the market does rebalances off wicks. So this was a low we had before we pushed up and then we came down. Now, of course, there is a proportion block right here, which did play effect. I'm not taking that from it. But when price comes up and taps off about 25% to 50% of a wick from a low, that's an automatic rebalance. And when the market does that, you can expect it to push whatever direction that it was back towards that direction. Um, Same with this. Of course, we have this huge fair value gap right here, but why did it stop right here? Because price was considered balanced above, and it didn't need to continue any higher. It used this to then push back down. We have this here. We look down at it. There is no fair value gap that is tapping off of. It's 100% using this rebalance right here to then push lower. We have this one right here. Once again, there is a fair value gap here. But a rebalance in price, it's showing you that from here and up is balanced and it doesn't need to continue higher. It did use this fair value gap. I'm not stealing that the glory from the fair value gap. But that was a rebalance in price to be able to push lower. We have this one here. Now it did tap into this fair value gap up here, but this is a rebalance because it pushed, this was the low before we had this push up, and the market came down and took that low and then used that to rebalance price to then push lower. We have this one right here. Once again, it used this fair value gap here. But we have this fair value gap right here. Why didn't it go to it? Well, because like I said, it used this from here up. From here up was considered balanced. So it was able to tap off these wicks to then push lower. We come to this one here. It used this wick that's right here, tapped off the 75%, considered price balanced. Even touched it. It came up, tapped off 75%, huge pushback. Came up, tapped off the 0% of it. The very start of that wick.
May I
Closed
ask
right at
something
it.
here? You have shown
Yes,
us
sir.
multiple examples, and I'm
hmm
like kind of feeling confused. How would you select these weeks? Because sometimes there is like a larger week on the left, and we are not taking
Yeah.
this one into consideration, but instead, like even on this one, right? There is like significantly larger wick, like slightly to the left, but we are not using it.
Because
Yeah, this one, yeah.
I mean, no, you could use that one too, but I use this one. You could have used this low too. This is perfectly
Mhm.
fine.
Okay, just
I
like in
use
previous
I use
examples, there was also,
yeah.
like a week on the left. I was looking at it and thinking to myself, why not that one, you know?
Well, so this was like which one are you talking about?
Just wait. Well, people
Are you
pretty
talking about like
much,
this one maybe?
yeah, maybe like another one. Let's have a look. Let's go back one more. Yeah, like look, there is a giant one like on the left, right? Like below, yeah, this one.
Yes, okay, so the reason that I did not use this one is because look where it closed. It closed above that wick. So price pushed down and then came back up. So it closed above this wick right here. Now, if the price
Mhm.
rejected like 50% of the wick or 25% of the wick and then pushed lower, well, that meant that price was using this right here, this wick instead, to balance price above off of to then push lower. But because it pushed down here and then we had this push back up, it closed above this wick, and so therefore it's not using this wick right here to then push lower. It needed to pull back up into here where now price was balanced because of here to then push lower.
Yeah, I see what you mean. That makes sense. There was another example where we had multiple closes above 50%. Yeah, this one. This one is
Yeah.
really messy, and this is like really scary and confusing. So if I was trading this, I mean, like literally, look how it closes above 50 and then above 75 even.
Yeah.
Yeah, this is one is like, can you go over like what should we be expecting when it closes like this? There are multiple closes above 50. That what confuses me.
100. No. I agree with you. I agree with you 100%. Um, so in a situation like this, you can wait for it to close above the 100% mark, which then if you wanted to, you could take an entrance and set your stop loss below this right here. Or you can take an entrance in here and set your stop loss above if you're still bearish. Now you can always wait later initial. The video is gonna get posted for y'all once we're done. So if you miss anything, you can watch it. Much love to you, brother. You have a blessed day. Um, you can always wait for the market to start to close lower and lower and lower, and then get below, and then you could take an entrance, or you can. It's really just you. This is a situation where you wait for it to either close above or stay below. And then from there, based upon your bias and what you believe is going to happen, you can take your entrance.
I say
Yeah,
something
makes
In a
on
sense.
situation like this, in a situation like this, if you really wanted extra confirmation, you see how it came down. We took the sell side finally. We pushed back up into this fair value gap, and then we came back down more and swept this low. You could have done a quick scalp off of this fair value gap once that was confirmed, because we failed to take buy side right here. We did not make a new high. We came down, we took the sell side. So that confirmed right there that we were still bearish. The extra confirmation was then after we came down, took the sell side, we pushed back up into this fair value gap, first fair value gap. We respected it and then we pushed lower.
I say something
So
on
in a,
this one.
y-
Y-
go for it.
y- With this particular pattern, which you basically see this kind of candles, I must
Mhm.
say you must check what is the time of the day. Is it opening
Yep.
time where the algos are in action? So you see that kind of patterns when the macros are active or some algos are running at opening. So it's very important because they will trick you, you know. So I have seen
Hmm.
these patterns and I avoid those time where all these rules are thrown out of the window and those candles are not respecting what you are expecting to respect. Okay, so in that case you got to be patient and wait what exactly it is
Uh-huh.
trying to do. If you see, you might be thinking it's going to go long and next candle comes up pushing down and then goes long and then push down, so it's very difficult for you to find entry. In that case you got to see the time of the day, what is the time, and make note when those macros get activated. These are
Yep.
algo driven patterns actually. So
Yep.
you got to train
So
your eyes to detect those. I have posted few algo patterns in post last week. I mean last couple of days. So yeah, that's what I can say on this. Because nothing wrong with the
uh,
fib, nothing wrong at all. Where you are, basically originating your fib levels, that is perfectly fine. But that is algo.
100%. And I love fibs and standard deviation. I have so much respect for it. It's just not my bread and butter like it is Riz. And anytime Riz posts anything about standard deviation or fibs, definitely listen to him on that. I've seen that man pulls off some crazy stuff. Consistently too. That's what I give him a lot of respect for is he consistently does that. That's someone that you guys can listen to and when it comes to it. Um, and I give you praise on that. But time is very important in ICT, like he was saying. So we have a macro right here, 1150 to 1210. Look what it was doing. Then we had another macro here, 1250 to 110. But this macro is when we finally saw that chase in liquidity. Because during macros is when the market should hunt down liquidity. This was a failed attempt. But finally, we had that confirmation into this macro here where the market did finally hunt down liquidity. Now, did it do it before 110? No, it did it just a little bit before 130. But that's when we finally had, and you can see 1 o'clock here, that's when we finally had this push down, was between like 110 and 125, 130. But yeah, you do need to make sure you're paying attention to time. Time is very important when it comes to ICT. Um, the market does specific things at specific times. And if you get caught up in on the wrong side of it at the wrong time, it's not a fun time. Make myself laugh. Um, anyways, but here was you see all this chop. We came down, we took some sell side, we pushed up, we took some buy side, we came down, we took sell side again. So that would have been like your first confirmation. We went lower, we made a new low. Then we push back up. Now we have an order block right here. Um, We failed to make a new high. So there's your second confirmation right there. The market then closed through this inversion right here, which is another confirmation, creating an inversion, and we took more sell side, made a new low. What happens when we take sell side? We always have that reaction back up to the upside. The market came in, tapped into this fair value gap right here. This is your perfect opportunity for a short, and then you could have just attacked this low here, from here to here. And I'm pretty sure that's what, 23,150. It's 23,211. So it's a $60 move. Well, no, I'm sorry. It's a $50, $40 move. So that's a nice scalp. But I mean, if you wanted to just continue to ride it down until the market decided it wanted to reverse, because if I remember correctly, we took some sell side here, um, on this when that happened. That would have been a nice little trade, and you would have gotten in what here is 195. You would have gone out at 120, so that's a $70 move. If you just trail your stop. Here's another situation. It's harder to see because it's a little bit smaller. But we came in, we did tap off this fair value gap, but another confirmation is we tapped into this low before we had this fake push up to then drop down. So that was confirmation right there that not only did we respect this fair value gap, we tapped into this low right here and stayed below it, and price was considered balanced below, so it didn't need to go back up. And then you have this last one right here. Once again, a lot of the times you're going to see this stuff paired with a fair value gap or paired with an order block or a proportion block. That's a good sign. That's like an extra confluence for you. But we came in and we tapped off this this proportion block, stayed under, tapped off the 50% of it perfectly, of the wick, and then used that to push lower. Price was
This is
considered balanced at that
beautiful.
moment.
Honestly, this is beautiful trade. Look at that, pattern perfection, you know.
Yep. I don't think you could have asked for better. And it happened right at literally at like 10 o'clock, which is a great time for a reversal to happen or a continuation. So it came up at 10, tapped into this PD array, this proportion block, and used that to then continue down. So you have time on your side, you have a proportion block on your side, and you have this perfect tap right here, not once, but twice. So that's three beautiful things telling you the market will go down. And of course, in situations when you're really trading, that takes time and effort, and it's not immediate for you to pick up on. But you do this long enough, you start to see these things before they even really happen. And so I'll be sitting there like, okay, if the market's going to go up higher, what do I want to see? I want to see it go into this area. And if it doesn't go into this area, well, that's okay. I'm not gonna sweat over it, that just means another day or another trade I'll catch. It doesn't mean that everything's over with. But another thing I will show you guys, and let's see if it works for this one.
Before you switch over to another one, um,
Yes.
there is a question for all audiences. I know how you take entries, but just for curiosity's sake, when you see this kind of um, patterns, do you go under 15 seconds entry, 5 seconds, or you just put limit order on 50% fib level? Why am I asking this question? Because there will be people who will be listening or watching video, and they might be thinking, okay, this is really nice. We do understand where to enter. So
Mm.
if you go through with your process, how do you enter? Do you go for market order? Do you put limit order? Or do you go under 15-second um, time frame? How do you enter?
I see what you're getting at. So like, are you talking about for
I
something like
mean,
this?
when you recognize there will be, um, the candle coming up, trying to
Uh-huh.
balance those fair value gaps, and you drawn fib level, and
Uh-huh.
suppose somebody want to take an entry, how would they go for an entry? Are they going to go down to 15-second, 30-second, or 1 minute chart and take a,
Well,
limit order or market order?
mhm.
I'm just trying to
So
make
I
it
mean,
simple for audience who can understand. If you see this kind
yeah,
of entry, how would you go?
no, I 100% understand. For me, if I see that kind of entry, I'm gonna look. I'm gonna drop down to the 15-second, and I'm going to find another confluence within that 15-second, whether a fair value gap's respected, an order block's respected, or a high's not taken and a new low's produced. Um, and that will give me what they call a sniper entry, because usually, of course, my orders are anywhere from they usually start at 5 minis, um, to the most I've ever done was 75 minis. Um, so I need very tight stop losses because of that. Um, Now for people who are just still getting acquainted with the market, I mean, and who aren't paying for the additional 15, 5, 30-second, whatever it may be, 1 second chart, um, your primary goal is to focus on the 1 minute. You need to master the 1 minute before you ever worry about a smaller time frame, because a smaller time frame is going to make you shake in your boots if you don't have experience on how to really read the market. Um, it's not a fun thing to be playing in when if you don't understand it, because you see, let's do this. You see this right here, it's a 15-second. It's all over the place. You go down to the 5-second,
I think you are not
it ain't any.
sharing your screen.
Oh crap, you're right. My bad. So you see all this, and you're gonna be jumping a lot, and you're gonna be scared because you're gonna see this high get taken here, and you'll be like, oh my God, it's reversing, only for it to then continue lower. Um, you go to the 15-second, it's still not as pretty. Um, you're still gonna be jumping around a lot because you have so many repetitive ups and downs, ups and downs, ups and downs, ups and downs. You go to the 1 minute, it's more clean. You can it's you see just more smooth movement. Even though it's still choppy, it's more smooth. Like later, Puka, you see this move here, and it looks pretty clean. And of course, there's still some down movement, but then if you drop to the 15-second and you look at that again, there's more to it. So it can trick you out of your positions more. You go to the 5-second, and this moves so much faster. When I tell you these candles move on a whole nother level, everything is happening so much quicker because every candle is 5 seconds and not 1 minute. So your response time is completely different than anything else. it has to be completely different than anything else. Because you can completely miss a perfect entry on a 5-second candle. And then your order not, and then you not clicking the button correct at the precise time that you want to. But this will allow you to get much better positions. And the reason I say this though is because like if you're watching the 5-second and you're watching the 1 minute and you're seeing it trail up from here, but then on the 5-second you see this huge drop right here. You're gonna think the market's reversing on you. You're gonna hop out of your position really quickly. I'm gonna see that because I've done it myself. I was first learning the 5-second. Only for then it to shoot back up afterwards. And it happens really quick because it's 5-second candles. Compared to when you're looking at the 1 minute. What we just looked at, if I'm not mistaken, was this right here. So huge difference in you freaking out compared to you seeing this and watching this fair value gap, knowing that as long as it supports that fair value gap, you're fine. To where you seeing where you're looking at this and you have so many more fair value gaps that you're having to worry about. You're just seeing all of these fair value gaps and you're not sure which one's the important one, which one's the one you need to watch, which is this and which is that. So that's why like I will use it for an entry, but I will go back to the 1 minute and I'll bounce around between the 1 and the 5 minute and the back to the 15 and so forth. Like when I posted that trade, just so I can see the different time frames and know everything's still running in my favor. Especially if I see a pullback. If I see a pullback, I'll drop back to the 1 minute, see where we're pulling back into possibly. And then if we respect that, then I'll drop back down to the 5-second and so forth. But you gotta master the 1 minute before you can anything else. Do I use CISD or breaker structure for entries? Yeah, I'll use breaker structure for entries. Because like a lot of times when, and it was a trade I posted the other day. What day was it though? It was right here. So we came down, we swept these lows, and then we pushed back up that day. This was the day I posted like that $17,000, $19,000 trade. We had this breaker structure here and we took these highs. So, but I wanted confirmation. So what did I do? I drew up this order block that's right here, this bearish order block. My thoughts were, okay, if the market's going to continue this, I want to see it get above. So the market came down, pushed back up. My entrance was this exact candle right here. Because when we closed through barely. And what I was paying attention to though was what I wanted to see was just because we wick higher than above other wicks doesn't mean we're having a continuation. You need a full body close. So I didn't enter here because that was not a full body close. We closed right here, right below the wick. And then we pushed down into this fair value gap, but we also tapped off of this high that was right here. and price was balanced, considered balanced when it did that, and then we pushed higher. Now, this candle then closed above these wicks. That was my confirmation. Very next candle came down, tapped into this, also tapped into, no, that wasn't a fair value gap yet. Came down and tapped into this bearish order block, which then I entered like literally right here on it. And then I attacked this high. So a lot of time, those are things that I pay attention to, because what I've told a few guys in here, if the market respects this high and doesn't take it, well then I can play it to the downside. But if the market closes through it, well then I can just use it to play to the upside. Same with a lot of these higher time frame order blocks. If it comes up and were to take this high, well then I can play it to the upside. If it does take that high, well then I know we're still bearish. So I'll play it to the downside. Did that help, ORP?
Yeah, that was really interesting. Actually, like these two trades you're talking about, I marked the times and days, and I want to go back in the platform to see what like happens on tick data in clusters, because I'm really curious, like checking it further down after your particular explanation. Looks like fun Saturday to me.
Yeah. Well, I'm happy it intrigues you. That makes me, I like hearing that kind of stuff. Now, let's, cause like when I was telling you guys about how the market considers something balanced to then push lower, um, sometimes that can contain breaker blocks. And I've shared with you a few guys in here breaker blocks. I don't know if I've shared it with everyone. I think it was right here when it happened too. So we have this low that's right here. Now a breaker block, we're looking at them. They kind of help you realize when the market, it's another way to tell if the market's balanced to the upside. Because if it gets tapped back into and respected, then you can expect the market to then use it to push the other direction. So let me get to it. So when you're drawing a breaker block, if you're drawing a bearish breaker block, it's going to start at a bearish breaker block is going to be, it has to be a black candle. Yeah, that makes sense, Brennan. 100%. That's why I post my trades though. So y'all can see my entrances and what I'm entering off of. If that's not enough though, I can do what you're asking. That's not a problem. Um but so for a bearish breaker, the candle needs to be black. For a bullish breaker, the candle needs to be green. Now, if it's a bearish breaker, the black candle has to be the one that takes the low. So it has to be the one that takes the low and the candle needs to be black. If it's a bullish breaker, it has to be a green candle and it has to be a green candle that's taking the high. It can't be a black candle that's taking a high for a bullish breaker. And it can't be a green candle for a bearish breaker that's taking a low. So if we look right here, and this is why they're a little bit more difficult to learn. When you're looking at a bearish breaker, you're going to see it first take a low, which it took a low here. And it needs to take a high, which it took the high here, previous high. Would you be less likely to take a trade if it's in the 50% compared to it being in a high or low? If it's in the 50%, if it's past the 50%, I'm not paying attention to it. If it's past 50% on a fair value gap, an order block or anything, I'm not paying attention to it. I want to see it stay outside the order block, outside the fair value gap. If it's not gonna, now it can wick into it. But if it closes at past 50% of the body, I don't want it. I don't care even if it moves $400 after that. I'll let that trade play, and I'll watch it. It don't matter to me. There's gonna be another day I make more money than what I could have made there. That's how y'all got to look at it. Just because you see something playing out, but if it's not respecting what you want it to be doing, screw that trade. You know there's going to be 100 million more opportunities for you to take a better one. You're risking your account for a what if. I rather completely miss a $400 move than to get lucky on a $400 move. That's not trading, that's gambling to me. I like to focus a lot on the highs or the lows for either a continuation or a reversal. So that's why I pay attention to a lot of the order blocks or a lot of the first fair value gaps in the high or a low. Because if the market's going to have a continuation, it's going to respect them. If it's having a reversal, it's going to disrespect them and take them. But back to breaker blocks. So for a bearish breaker block, it needs to be a black candle. It needs to be the one taking a low. When you have a bearish breaker block, it's going to take a low, then it's going to take a high, like we see here. So what do? We took this low, then we came up, we took this high right here. So the bearish breaker is going to be this black candle right here. Now, I want y'all to see this because this is another way to know that the market has balanced itself and does not need to continue higher. This low and this high tapped each other. What happened from there? We pushed lower. When this low and this high tapped, price was considered, it's a rebalance. And price considered it balanced above, it had no reason to go up. So we had this huge consolidation for a little bit, and then finally that rejection to the downside. Very important stuff to be looking at. Because you'll see it happen a lot. You look here. What's this low and what's this high doing? They're touching. You look here. What's this low and what's this high doing? They're touching. Did I miss? Oh, thank you for that. Thanks for posting that, Riz. You look here. Look at this high right here. Look at this low right here. They're touching. That's it. Those are rebalances. That's literally the market rebalancing off a low. This low to this high. This low to this high. This low to this high. Those are rebalances. This low to this high. That's telling us, that's extra confirmation that the market's pushing down. You don't, when you see that, that's a beautiful thing to tell you, get the fuck in a trade. But that comes with time. You don't want to, this is not something you rush. And I can show you a bullish one as well. I'm probably missing them by scrolling too quickly. Find it. And the chart's more clear. I may be zoomed out too much. Sometimes I wish I kept stuff on my chart and I didn't delete it, because I make my life complicated sometimes by wanting a clear chart. I don't know if anyone else does that, but I do. So here we go. Green candle took the high, made a new high. We came down, we took a low. That's a bullish breaker. Price was considered balanced. And then we pushed up. There. Got questions? Whoa. Any questions at all?
Yeah, I don't know. I'm
44.50.
like this still the whole thing with breaker blocks is kind of vague to me, to be honest. I'm just sometimes I'm looking at it at either weak retest as a rebalance, right? Or sometimes like maybe even as a what people call it like mirror level, right? When you have a low and it's a breaker block and then retest it and bounce off, like continue further down, right? Like from the same low. So I'm not really incorporating them too much, I guess. Like now I'm looking at at the charts, looking for them with you, but like for now, kind of seems complicated. I don't know, like what's wrong with me
It,
and them.
no. They can be complicated, and so that's why a lot of the time, like I don't always look for them. Um, what I'm gonna look for is like this. If I see, it may be the next one. Like if I see this, that's good enough for me. I don't need to see anything else. This low tapped into this high. That's perfectly fine with me.
So basically,
Now,
this
if
is a
we
weak
want to, we
rebalance,
can.
right?
A what?
Can we call it still a weak rebalance, or it's necessary to be called a breaker block as a main thing here?
Well, then you got a breaker block right here. This black candle. We took this low, then we came up, took the high. So not only did we do a rebalance, we had this breaker block right here. I'm always better at finding bearish breaker blocks than I am bullish breaker blocks. I'm not sure why. They're easier for me to spot. Um, but I love bearish movement. That's me. I had a bunch of them drawn out, but like, oh, and then Brendan and me over here, perma bears. It's gonna bother me if I. Can you tell when price is going to respect the first FG or order block? Rather than do a liquidity sweep, let's say you want a liquidity sweep for an entry, but price reacts off order block, would you still take the trade or let it go? Hold up. Yay! Green candle took the high. Boom. Took the high, took the low. Market passes through it, then comes down, uses it to then push higher. So with a breaker, like I was saying, a bearish is going to be the low, the candle that takes the low, and then following that, it needs to take a high. So like the one that I drew. So do I still have it? I hope I still have it. Yep, right here. I'll answer your question 1 second, ORP. I am one track minded. So we have the black candle that's right here. It took the low, and then we moved up and took the high. The market has to pass through it. It has to come down and pass through it. So it's not like a fair value gap. It's not like an order block. The market then will come down through it, come back up, tap into it, and then use it to play to the downside. That is a breaker. That means price is balanced above, does not need to go up more, and therefore you can continue to expect further downward movement. Same with here. We have that green candle right here. It took the high, and then what do we do next? We came and took the low. Then the market came back up finally through it, and then came down, tapped off of it, and used it to play to the upside. Those are breaker blocks. Thank you, Jesus. I finally found it, and now I can rest. Blood drinking bears. uh, we got the perma bull, and then we got the perma bear. You should change, Brennan. You should change your name to Bearnan. Oh, whoa, whoa, whoa. You're gonna change your name to Bearnan? I wish Nick was here because I'd love to see his response. Um, so let's see. I know, I think it's pretty great. It also would kind of spite Nick if you did that. So it'd be kind of funny because after the shit he said on Friday. Can you tell when price is going to respect the first fair value gap or order block rather than do a liquidity sweep? I mean, it's pretty easy to tell if price is going to respect a fair value gap or an order block, regardless of what it is. If you have candles closing outside of the fair value gap and you just have it wicking into it, but the candle's staying on the outside of it, well, that's a good sign that it's respecting it, which is a good opportunity for an entrance. Same with an order block. If the candle is closing outside an order block, well, that's a good sign that you can trust it. Um, if it's playing into it, then that's a problem. Like something like this, like you have this fair value gap right here. Well, I ain't gonna that's not what I want to see. I don't like that. It's not pretty to me. Um, I ain't gonna take that kind of trade, and I'd rather let it continue upwards like that than for me to take it. And then you have now. I mean, if it comes in and it okay, cool. Yeah, I want to see to me, in my eyes, if it's respecting a fair value gap, you're gonna see it tap off a wick. Like this right here. That's beautiful. That's kind of what I want to see. If I don't see something like that, well then let's see if this works. That stayed under 50%. That's beautiful to me. And we can take it a step further. I mean, shit, this is awesome. But we can take it a step further. I mean, you see this fair value gap right here. It wicked into it, closed outside of it. That's a beautiful. That tells me that's strong, and I don't need to stress over it. Um, this right here, the market barely went into it, and then it stayed outside of it. That's a good. That's pretty to me. You got this right here. Look how the market went into it and closed outside of it. That's perfect for me. Like that's what I want to see. Um, that's the kind of entrances that if I'm gonna take it, that's what I'm gonna take. I don't prefer entrances in the middle. I prefer to see them towards the top. Like if I'm gonna catch a trade and I'm bearish, well, what I'm gonna do is I'm gonna pay attention to this order block that's right here at this high. Damn. Riz and Brendan about to get into it. I'm gonna pay attention. Uh, this is great. Anyways, while they battle it out in the chat, what I'm paying attention to though is this high right here. Um, I want to see the market. Yeah, it came up through here, and then the market tapped barely through the order block. But then once we got back down below the 50%, once we got back down below it, that's a good opportunity for entrance. And then I mean you have another confirmation right here is you have this low right here in the market. Use this low to push further down. We have a 50% tap, we have a 75% tap. But then immediately from there we pushed further down. So it was a rebalance off this low, push lower. But I'm paying attention to what's going on at the tops. Like you saw in that drawing earlier. Ooh, whoa. Well, that did a whole lot more than I thought that would. You see right here. This was the trade. Well, if we're going to have a continuation, the market is going to come back up and close through this high and make a new high, which is exactly what we had. So I'm paying attention to the tops. Market comes down from there, disrespects this bottom, this low. Well, then I can use it then play to the downside. If it respects it here, well, then I can use it to play to the upside. But the fact that we came down and we used not only this fair value gap, but we did use this high that's right here. Price was considered balanced, and we could push higher. That told me we first had this first confirmation, and then second confirmation, we closed the body of the candle closed higher than the wick. And then we tapped off this order block and then pushed higher. That's all you need. Nothing crazy. Let's say you wanted a liquidity sweep and entry, but price reacts off an order block. Would you take the trade or let it go? I'm not, a liquidity sweep just is going to confirm to me that the market's about to go another way. If you just see one big ass candle and then a huge old wick below it, that's confirmation that the market going to go another direction. What I was talking about with Brennan the other day, and this is the exact spot we talked about it. you don't typically just see wicks like this. You see little ones. So the market's reaching for something. It's going to grab. It's grabbing. In a situation like this, you have your fibs. You have fibs for a reason. The only fib I like to really use are quadrant fibs. Well, you can draw out this right here, and this is going to tell you if the market is going to continue one direction. So look at this. First we tapped off the 50%, then we closed through 100%. Okay, cool. So the market's continuing further down. If the market's going to continue further up, it's not going to close past 50% of this wick. And it could close past 50% of this wick, but and then come up, but probability is if it closes past 50%, we're going to continue lower. So then, okay, it closed through that wick. Let's wait and see what happens next. Another wick. Now look at this. Well, that's an order block. Wrong thing, guys. Sorry. Let's look at this. Now, Riz, tell me this ain't pretty. This gives you some hope. What happened here? We stayed above 50%. What happened here? We got just below 25%. What happened here? We got above 25%. That right there is telling you the market now there's a change in state of delivery now. There's a high probability we can continue to the upside. So you got that. Then you have the market come up, sweep all this liquidity that's through here, through this entire area right here. All of that. What happens next? We come back down. Where do we come back down to? Come back down off this high. Price is balanced. What do we want to do from here? Now you could have entered off of this this fair value gap that's right here. There's nothing wrong with that. If you were to catch that, that's awesome. All more power to you. But if you're wanting confirmation, then wait for it to take a new high. Wait for it to take that high. The previous high that it had. That will give you more confirmation. So what did the market do? Balanced itself out, pushed up higher. The body closed above the wicks. And then we tapped off the order block and we took the high. Boom, boom, simple trade, 574 to 666. And my fiance watched me take this trade. We were talking over, weren't talking, but I was live streaming with her, trying to help her.
Was this the trade after which she said yes?
You said what?
Just joking, asking if this was the trade after which
Oh,
she said yes.
that made her say yes. I still,
On
yeah.
the
Would
serious
you
note, though.
mind,
Oh, go ahead.
Chris,
Okay.
would you, sorry,
No, go ahead.
It's the trade that made her say,
thanks.
"Oh shit."
Could you please change time to 5 minutes? Just want to see something.
Of course.
No. If
You
you
just gotta
scroll
find where it
down
is.
where we were.
Yeah. I think I gotta go back actually.
Yeah.
If you're wondering why that fair
Yeah.
value gap didn't get tapped into, there's your answer.
Yes, that's what I was going to ask. And second thing is that if you see the candle patterns, look at these two bullish green candles. So that
Here and
in a
here.
5 minute chart, when you see these kind of things, it means market gonna go up or reversing. So
Whee!
I look into patterns as well. So that's what I wanted to highlight here. It's not only just fib levels. If you open 5 minutes chart or 15 minutes chart, you can see what exactly is going to happen. So yeah, that's
Yep.
another thing you can keep eye. At least 15 minutes, 5 minutes, keep eye on those ones and a higher time frame like 1 hour or 30 minutes. Depends what is your preferences. So yeah.
Yep.
So that's another point I wanted to highlight while you were drilling down into more details. Anyway, thanks.
No,
So
thank you,
yeah,
bro.
I guess
You
I was
pointing out this stuff really helps.
I was on the same page with Reese. I meant to ask about 1 minute FPG, but didn't get tapped. So it happened because 5 minute FPG got tapped later, right?
Yep. So that 1 minute candle that you see is inside of a 5 minute candle. So remember how I showed that 1 hour fair value gap earlier in the beginning? Telling y'all how it was balanced and price didn't have to retrace to it.
Yeah, I'll also add
Crimson?
like a couple of pictures here in chat. Have a look, because this is exactly the situation that I was looking at ES. I guess exactly the same thing happened.
Yep. Yes, sir. Yeah, that's why it's very important to look at 5 minute time frame, 15 minute time frame, 1 hour time frame, because a lot of these 1 minute candles will be inside of those, and it gets tapped on a higher time frame that these 1 minute candles are a part of. So that's why sometimes those candles don't need to get touched. So like for this one down here, it didn't need to get touched because it's part of a 5 minute candle. Um, Same with this 1 hour. So if we go to the 1 hour, we go down, oh my lord, we go down to here. We have this 1 hour candle. Well, what we're looking at right now, I draw it out, I drop to the 1 minute. Remember, we have these two candles down here that didn't get touched. Why didn't they get touched? They're part of the 1 hour candle. That's why market didn't have to go back for it. And plus, when we looked at a smaller time frame, everything inside this 1 hour fair value gap on the 5 second had been tapped into. Every fair value gap had been touched. Therefore, that's also confirming that price is balanced in that fair value gap and it doesn't need to pull back. If that, hopefully that makes sense.
Yeah, I actually feel so much smarter now.
You have a great day, ORP. I'll reach out to me when you can today, okay? But yeah, so it's stuff like that. I mean, I'm not waiting for a fancy setup. I'm just waiting for the market to confirm to me that it's doing what I'm expecting it to do. And I'm not waiting for previous session sweep followed by an inversion, followed by a fib extension level. Um, it- I don't do that. I keep it simple with fair value gaps and order blocks and a bearish or bullish bias and use higher time frames conjunction with lower time frames to find my entrances. That's just me. That's my bread and butter. Where you got everyone needs to find what works for them and then make it work for them and marry that and don't leave it. Make it the issue is a lot of people try to find too many different strategies to use. It only confuses them and makes things more complicated. Whereas if you find a simple strategy that works and then you just perfect it, then that's all you need. Like Riz, he's perfect with his fibs. Man never misses. That's his bread and butter. And then he uses it conjunction with ICT for confirmation. Um, and so that's what he found works for him. Mike's over here learning how to pay attention to the tops and bottoms and find entrances in those. I don't. I know it was working for him the last time we talked. That hopefully he's able to turn that into his bread and butter, and what he's best at is doing that, or just finding finding what works for you, what you register in your mind in that moment. Hey, I've seen this before, and this is what happened when this happened. And so if I wait for this, or if I do this, then I'm going to enter here, and then I know the market's going to go to here. And you start doing that, and it becomes simple. You're not, it doesn't become an issue, and there's no struggle. And then your trades play out consistently, perfectly every time. And yeah, of course, you're going to have your losers. You can't always be perfectly correct. I mess up trades too. Sure, Riz does as well. Um, but the thing is like we just wait for the next setup and we execute again. You have the proper risk management. That tiny little loss won't compare to your next trade where you win. You'll make double, triple what you lost. Sometimes even more. I know Riz, he told me one of his rules is what his stop loss is usually what he made from the day before. I don't know if he still does that, but he shared in this channel before that what he made the day before is what his stop loss is for the next day. It's a good way to protect your profits. I was talking with Emma about that last night. So like, say you made 1,000 on Monday and 500 on Tuesday. Well, then when Wednesday comes around, don't risk more than $500. If you lose 500, call it there. Um, that way you protect the $1,000 that you made for Monday. And you're not back at square one on the week with nothing in your pocket. I'm sure you guys do that, but I just wanted to reemphasize it. Okay, What else y'all got?
Just to add another thing, what you were mentioning, uh, you might have seen my post in main channel. I start with the one MNQ, build, the buffer, and this is my very old method. I build buffer for at least for 200, $300 and keep doing one or
Yeah.
two MNQ contracts. Once I build enough buffer, then I can go for three contracts or five contracts of MNQ, and one trade can push your PNL to large number. And if you notice the graph I post, PNL one,
Mhm.
the complete data.
Mhm.
If you see, all my PNLs are like stairs. Yeah, you will see
Yeah.
they are stack on each other. That is the reason. You will see all the time stairs going up. So why it
Mhm.
is happening? Because I'm stacking, let's say 200, $300. It will start from 50 to $100 something, and then keep building upon that. So yeah,
Yeah.
that's the easiest way I can say, without causing any stress. One MNQ or two MNQs, and that's it. Build buffer and then use that buffer as your stop loss. So you are not gonna be stressed out. Oh, you are blowing up accounts. Another thing I also mentioned, I would like to highlight this one here as well. Suppose you have a three or five accounts, do a rotation among those accounts. Suppose
Uh-huh.
you have red day on one account, just stop that account, don't use that one, leave it for next day or something like that, or maybe another session. Divide your day in multiple session, two sessions, three sessions for maximum 1 hour or half an hour. That's it. So that's another way to control. And don't forget to use a hard stop loss, your daily loss limit. So yeah, I mean, that's what I can say here. Thank you.
No, that's brilliant. So you're basically creating your stop loss as the day goes. Is that what you're getting at?
Yeah, I use, let's say today I'm trading, I'm using one MNQ, whatever I have gained,
Yeah.
I'm using that as a stop loss. So if you see, I'm not falling on previous day gain or something like that,
Yeah.
unless I go insane and really want to blow up my account or something. Yeah. So another thing I would like to highlight here. So I'm using a Ninja Trader live account. So live account is
Mhm.
not like a prop firm. Whatever you have gained is gone. So it's a live money is not a prop account, or you can sign up again or reset account. So that's another thing.
Mhm.
So you have to be very, very specific with your entries and wait for a right time. There's no I mean, there's no competition going on or something. So just wait for a right time when you feel confident. If you don't want to do it, don't do it. Simple.
Yeah. If you're not confident, or you see that you're entering a trade just because you're having fear that you're gonna miss something, just stay away. I mean, yeah, it's cool if we get, even if you have, like, I don't care if you're bearish on the day, like, and the market's going down. And this is even for me. I'm speaking on me. I'm not telling you guys. But I don't care if I'm bearish and I expect the market to move $600. Um, if I don't see the entrance that I want, I ain't getting in. I will watch that trade happen until I see an entrance. And if it doesn't provide one, you know what? Oh well, there's tomorrow. You just you missed a little bit of money today, and that's okay. But I rather have control over myself and miss a trade completely than get lucky and make a crap ton of money. Because the quicker you make money, quicker you lose it. Because you can get lucky in a trade and have breaking your rules, but that's going to turn into a bad behavior pattern to where you begin doing that more. And even if your bias is bullish or bearish and it's doing exactly that, if you wait for that setup and you wait for your rules to play out, you will win so much more in your trades. You will have a lot less losses. Where if you just get in at a random spot because it's moving quicker, or you don't think it's going to retrace back to where you want it to. But that's just how I've played it out now. And it's because I used to do that. And I used to wait till we got close to a liquidity area, then I just entered because I was like, we're $10 away. There's no reason it should reverse here. Only for it to reverse here because there's an order block there that's protecting that low. Because there's always going to be order blocks at a low and a high. I've never not seen one. Um, I've gone in trades to where it was in the middle of a push up or a push down. It had just closed through a fair value, just respected a fair value gap, but only for it to then reverse and go through a fair value gap, go to a fair value gap that's on a higher time frame and blow my account. And then, but I have gone lucky at times to where I did win the trade. But that created a bad behavior in me, and I started doing that more. And then I got caught in this cycle of just won some, lost some. But the losses outweighed the wins. I'm over here pissed off at myself, like, why did I do this? It's just patience. Um, the thing I'll tell y'all is this, because I have to remind myself. I know we want to trade every day. It's fun, at least for me. But thing I'll say is, if you just made $1,000 yesterday, why do you have to trade the day? Give me a damn good reason on why you have to trade that day, and then I'll tell you to trade. But what I'm getting at here is you made $1,000 in a day, $2,000 in a day, and while most people work 1 to 3 weeks for that, and yet we feel like we have to make money again the next day. When you could take the entire week off and you'd be okay. So that's something I have to constantly humble myself on because there's times where I get butt hurt because I didn't stay in a trade longer and make more money, or I missed a trade. When I sit back and realize it's like, bro, I'm already up on the week and I'm made more than most people do in a month. Why do I don't have to trade today. I can just wait for it to come to you. Wait for the market to show you that it's going to do something. Like that trade I just showed y'all a few minutes ago where we came back and took that high off the bearish order block and then we pushed to that next high. Like that's a perfect setup. And I just sat there and waited. That's all you gotta do. Sorry to parent y'all, but I just don't want to see people fail. And the big reason we usually fail is because we don't know how to follow our rules. So,
I say
y'all got any?
something on that.
What's up?
One more last thing I want to highlight here. You know, suppose you take one MNQ and target 20 points, it means $40. If you go 25, $50. Okay, so that gives you confidence. Oh, you gained $50. If you do two trades and it's $100, okay, just 20 points. 20 points are very easy on MNQ, very easy. But if you use the two contracts, it's almost $100 in 20 points, yeah, or $80 depends how many points you get. So I don't remember who asked about the PNL. So if somebody is struggling and they see okay those numbers are going down or going up, and they become greedy or fearful, so in that case change your settings to tick or points. So those dollar figures, they don't basically impact your thinking or emotions. So that's another way. And try to use one or two MNQ. That's it. Build confidence, and you are keep doing it. 20 points, 25 points. You will see the magic. And I'm saying from experience, I've done it countless times using one or two contracts and generated nearly $1,500 countless times. There is a complete track record I done. So yeah, don't look for a big numbers like 4,000, 5,000 in one trade or 10,000.
No,
Yeah, I am not looking for those. Honestly, I'm not looking for those big numbers.
that comes with time and experience in a bigger account. Now, unless you have a lot of experience, you can take big trades with just your drawdown if you're past your drawdown. But and I but that takes time and experience. One of my accounts I keep at $4,500 in drawdown just to test myself on one of my prop firms. But I didn't the big numbers I make now didn't just happen overnight. We backtrack when I had my first Apex account. My first Apex account, I did three, 300 to maybe 500 a day. Sometimes really it was like 250 to 500. But I wasn't shooting for 500. 500 was my limit. My goal was 250, and I did that for 6 months. Um, there were days in the market that they were really good, and I did a few thousand, of course. But by the time I ended that Apex account, I had ran it up $56,000 in 6 months. Um, but then by the time I'd gotten to that point, I was so consistent at what I was able to do. Well, now I can take bigger trades that will yield me the bigger profits. But that comes with time. Don't force your account growth. Let your account growth grow naturally. The best thing you can do, Riz does it, is use MNQ. MNQ will grow your account and it will allow you to become consistent at everything you do without risking blown account after blown account after blown account. Everything I tell people is when it comes to minis, every $10,000 profit you have, you can add one mini. If you're up $40,000, you can do 4 minis. $50,000, you can do 5 minis. And the reason I say that is because, man, you run 15 minis and you have a 4,500 drawdown, and this is where the firms get you. A $10 move is $3,000. The market will move $10 like it's nothing. And it can be frustrating. But I tell you that from firsthand experience. Because I'm over here like maybe I'll just get lucky. Nope.
To
Just comes with
enforce
time.
your point here, this same thing as I said earlier, if you are making $40 with one MNQ and you translate to mini, that is $400 actually. So it's just basically building a solid foundation using MNQ and then replacing with the mini once you master your strategy and you know that you can produce consist consistently 80 points or 100 points. So if you multiply those with the $20, basically $1,000 a day is very easy by replacing MNQ with the mini. But you have to master with MNQ. Yeah.
I'll tell you this too. There's a huge different feeling in the pit of your stomach when you're in a mini trade versus a micro trade. I will tell you that right now. It's a whole, and I'm sure you guys know this. Brandon already changed his photo to a bear. I just noticed that. Oh my god. Um,
Let me tell you something on that mini.
what?
I wasn't aware about prop firms, and in Lorenzo's group, I mentioned that just this evening. I mean, I came across with prop firms by watching Lorenzo's video. I had a
Yep.
IBKR account. One of my workmate, he saw me. I was doing option trading. He said, "Why don't you try futures?" I said, okay, fine. And he used to do all these pro firms, but I wasn't aware. I had IBKR account and I opened NQ Mini. I thought mini means is small. So I end up blowing up nearly 8 grand in a one trade. And I thought, what the hell? He said to me, mini. And that's what I tried. Why, eight, 8 grand is gone. And next day, I told him that's what happened. He said, I meant micro. I said, I didn't know that. So mini means is small. So yeah, that's how I discovered pro firms. So yeah, I used
Yeah.
on my personal account, and that's what happens. So
No,
yeah,
no.
that's
But
a
yeah,
very,
so many,
very expensive mistake.
yeah, that is an expensive mistake. Damn. Uh, many, minis though, I mean, your stop loss, if you struggle, if you struggle losing $300 in a trade, then you're gonna have to learn to get comfortable. Because when it comes to minis, that's gonna be your average is gonna be a lot more than that. Whereas like a micro, a $300 loss is like what? Let's do the math. $500
It's that
loss
simple.
on,
$1,000 equivalent to 10,000 in the mini.
well, what I'm getting at is
Hundred,
like move wise, how many
hundred
handles.
dollar,
So
yeah,
like,
hundred
so
dollar is equivalent to
a
1,000.
50 a $50 move on a mini is $1,000. A $500 move on a micro is $1,000. A $25 move on a mini is $500. Um, a $250 move on a micro is $500. So a $12.50 move on a mini is $250. $125 move on a micro is $250. So big difference. That's when you get to a place where you're doing big contracts, that's when um having a 5 second, 15 second is very important to have in your armory because that's it's going to be the make it break it for your account if you're not careful. Okay, y'all. Any questions though? I don't want to sit here and parent you guys.
No, you're doing really well. I think we
Uh,
need it once in a while.
My mentor still does it to me. He just lets he just turns into freaking stock market dad and just will lay into me into all of his students. My mini PC got a burnout and needed a new capacitor change. I got it fixed locally. This Wednesday it happened again. It was going to cost even more, and I'm not sure if this issue won't even appear again. It was also making me put a break even. I trade sooner than I should. More expensive than being poor. Yep. Nothing is more expensive than being poor. I know exactly what you mean, man. But is that a trade you took that went on to do a whole lot more?
No, actually, I had just a few trades this week. I don't know how, but like I'm in the green, but not much. The problem is my eval, like you know me, I'm trying to get my evals and I'm trying to squeeze the most out of them, be it like practice or be it whatever. Like let me show you a couple of trades I took. This was a nice one. So I'm in the green,
Yeah.
but every day I'm looking at like I need to make 1.5, and I understand that I can make 1.5 easily in one trade. It's like not an
hmm
issue the way I handle my trades. It's just like I'm so squeezed like emotionally and financially that I cannot just seem to hold them. Like my entries are like on spot, but like here in this one, the last one I'm showing. I saw
hmm
like first of all there was 850 and I saw a large seller, so there was basically an iceberg. That's why I got out, and the read on this one was correct. So sometimes I'm trying to trade ICT, but at the same time I'm looking at the order flow to see if something changes in the moment. And the last example actually worked quite well in my favor.
Are you
So
trading
yeah.
bars?
Yeah, it's just it doesn't matter because I'm running another platform for my analysis. This one is just where I execute trades.
Okay.
Yeah, it's
I'm
just,
about to say
software.
props to you, bro. I'm
Yeah, thank
about
you.
to give you a standing ovation.
Yeah, so I think I'm up like maybe 800, but it's like a bucket in the ocean because the account is gonna leave like 2 more weeks, and I should finish it like just in time. So yeah, I'm not
Has
trying
anyone
to
ever
gamble
looked
it,
at
but
Rico?
trying to, trying to make it live like 1 month. At least I either learn for 1 month or I get a chance to pass it, something like this.
Yeah. Has anyone ever looked at Rinko bars on their
Yeah, of
chart?
course. Yeah, have
There,
you?
there's some interesting stuff.
There is. I can tell you there is even more than Renko. There are things like, let me show you. Maybe I have a picture somewhere. Right. Have you heard about range bars?
Yeah, those are
Yeah.
crazy.
Yeah. This is what I'm also looking at once in a while. Sometimes there are like crazy things happening there.
Yeah, no, they'll throw you off.
Well, what they're good at, basically, if you have a look at some range where high and low gets swept, but just like by a tiny
hmm
bit, right? Like an expanding range. Actually, there was this range this last Friday. You can go there and remember this like 10 a.m. stuff that you were showing us, where there was
Uh-huh.
5 minute FBG, right? Basically, if you look at it at 1 minute, you can see this kind of like expanding wedge or whatever they call it. I'm not sure. The idea is that like high and low get repeatedly refreshed, right? And like the range is expanding. And on the range bar, you would see the same thing, but like way clearer. It looks just like a pyramid expanding. So it kind of has some cool stuff to it, but you need to adjust for volatility because like at higher volatility range bars look a bit different than at low. But the whole idea is they just show you this expanding range and you kind of see it clearer without all this. So they don't account for time; they account just for price change.
Mhm.
So there is that.
Have y'all ever seen volume candles?
I tried them like I think a long time ago looking at stocks, but what would give you like one really fat volume candle, right, and like a few like thin ones, and it kind of looked funny on the chart.
Yeah, you got fat candles and skinny candles and little
Yeah,
candles.
yeah.
See, like that. Like you got you're just like, wait, what?
Yeah,
I mean,
like
that kind of help
especially.
you though to see when you got buyers and sellers stepping in, as Riz would call them.
Well, the problem is if someone's buying, then someone's selling. You know what I mean? So how would it
Yeah.
help you exactly? I'm not sure.
Well, you see this huge push down, and then you get this huge fat green candle that shows you that we're having a hard push
Yeah,
to
and
the
this
upside.
expanding range, you
So,
can see it right around 10
yeah.
a.m. This is exactly what I'm talking about. So on the bar on the range bar, it would look like a pyramid, basically, which is kind of cool.
Now I want to see it. Wait, where is it? There we are. Oh my.
No,
Oh
no, no.
my. Oh.
Trading View is bad for this. It doesn't give
Oh.
justice. Yeah, yeah. I
I
have a
was like,
small part
geez.
of the big. Wait, I'll just show a snippet of what it should look like. Yeah, I sent it to the chat. Sometimes you would see something like this. So it's like
Am I
forming a pyramid.
hallucinating, or are there blue dots in it?
Oh, it's
Yeah, there's
like
blue in it.
POCs.
Okay. I was just making
Oh,
sure
oh
that
no,
I'm
no,
not
wait,
seeing
wait, wait.
things.
No, this is wait, I'm wrong. I marked imbalances on this one. So blues
Okay.
are like bullish imbalances. When you have
Mhm.
like let's say 2.5 times more asks than bids, and
Yeah.
then red ones are bearish imbalances. So like literal imbalances from tick or the flow data, right? Because we can see like 50 contracts sold and like 150 bought, and on this level, like that it corresponds to this is what gets marked. But it's not important. You can do whatever you please. I'm just showing the range. Yeah, yeah. This is footprint chart basically. But this one I'm using, this is ATA's proprietary like bar. It's not like regular range. It's called like some range XV or whatever. Like they have a developer who gave it exactly to this platform only, as I understand it correctly. So there is
Yeah.
like an algorithm how these bars are being drawn. Basically, the idea is, let's
Okay.
say, a candle is being drawn, and you can set a certain number in ticks. Let's say if price goes
Mhm.
16 ticks, then like another candle gets drawn. So you can see when like one green bar is shown, right, and another one like another green like open to close is going to be exactly 16 ticks, and then open to close of the next one exactly 16 ticks, which is basically like Renko but on steroids in a way.
Well, guys, do y'all have any questions? Sounds like everything's starting to kind of come to a close here. Oh yeah. Uh, Crimson. Brennan, if I Brennan's in he's in IT. So if I'm not mistaken correctly, I remember he telling me he's in IT. So he may be able to help you.
Yeah, guys, it's just,
Yeah.
like don't forget that I'm in Armenia and this like situation here is completely dreadful. For example, this mini PC that I got, I bought it in States because there is no way to get anything here. I bought it in States, I got it transported, like imported. I still have warranty, but it's all useless because I have to ship it to States, like paying like myself, and then they would ship it to China, get it fixed for free, and then I pay shipping again. It makes no sense. So yeah.
Yeah. Well, he may be able to help you figure something out if you need someone to talk to.
Yeah, appreciate
But
it.
yeah, yeah. Uh, good live today, everyone. I'm happy you guys made it. Hopefully, what I went through helped y'all somewhat. We talked about a lot of different things. Um, if you have any questions, please, like I said, feel free to reach out to me. Um, I'm always around to help you guys. So that's what I love being able to do. Um, so just let me know. Okay?
Yeah, thank you for the session.
Yeah, no problem at all.
Yes, man. Thank you very much. Thank you.
Yeah. When you say Mike, when you say the balancing was something you never knew about, are you talking about balancing off of highs and lows, or are you talking about balanced fair value gaps? Okay. Yeah. Yeah, that's a good way to know if a fair value gap is still considered an inefficiency, as we know. Because like when we look at the 15-minute and we see a fair value gap hasn't been tapped into, like this one right here. Oh wait, this one was tapped into. Or like this one down here or this one down here. Well, we sit there and ask why. Um, but it's because on the 1 hour, that's just one candle. And then when I drew out this fair value gap right here and we looked through it, every fair value gap inside of that on the 5 second time frame had been tapped into. So it had no reason to have to return to it, which is why I was able to push higher. So being able to look at it on a smaller time frame will really help you in the market know if it's an inefficiency or if it's already balanced. Because sometimes you will have fair value gaps that don't get tapped into. And I think one of them actually, well, here it is. If we were to look at it, this fair value gap up here hasn't been touched yet. But if we were to drop down to a smaller time frame, I guarantee you the reason it didn't have the market didn't have to come back to it was because it was balanced out through here. But yeah, that's why I wanted to go over that today so that you guys can see why the market will retrace back to fair value gaps and why it won't retrace back to fair value gaps. So like when you see a fair value gap, you can check it on different time frames to see if it's been touched already or if it hasn't.